Hello everybody and welcome to Profit Mission Control. This is Matt Trader. I'm coming to you with a weekly recap video for the prior week, which was February 22nd. I did not have time to record a video last weekend and I didn't want to miss the opportunity to document it. So I'm going ahead and going through this weekly recap, which is about a week later. Later this weekend, I'm probably going to also make a video for the week that ended March 1st. But for today, we're going to go over the week that ended February 22nd of the $50,000 challenge. And we still ended up in the green, adding about $750 to the portfolio. I'm going to walk you through the trades. There's a couple of stocks in particular I want to talk about because there's some change in plans kind of in flight. But we'll address those as we walk through the video. If you are watching this video for the first time, I definitely appreciate you spending the time here. If you like the video or if you want to get more information about what we do here at Profit Mission Control, please hit the like button and hit the subscribe button, and you'll get new content at least once a week. So let's go and talk about this week. We had a total of, let me go through here, this is better. There we go. So we had a total of 11 launches for the week of February 22nd, which was 7 winners and 4 losers, puts us at an accuracy of 64%. Still very healthy. Anything above 50% is healthy. And this is my historic average, between 65 to 70%. So that one would be a typical week. This is a typical week. Total profit per share is $1.86. Profit factor was 1.38, which is a little bit less than I hope for. I typically shoot for at least 2 or above 2. So the reason why this was a little bit low was because I had a big loser down here trading PASS, where I didn't exit at my designed stop loss or planned stop loss and ended up taking a larger loss than I typically do or wanted to. So overall, profit to risk plan, we were targeting 110%. We ended up with 80%, close to 80% or 79%. And again, the reason is our average loser was a little bit higher than our average winner, but we still ended up with a net profit of $752. Now, basically the 4 losers here: WBT DVAX CDEV and PASS or PAAS. We'll go through these and talk about them as well as the winners. So let's go ahead and look at the charts. So first stock on the list was MTW, and MTW was a stock that we traded before prior week with a loss. So if you recall last week, the week of February, February 11th, I believe, or probably February 13th or 14th. We traded this one with a loss. We wanted it to break through this consolidation area, but it ended up testing it and then pulling back, and it hit our abort price, so we never made a win on this one. I did buy my 401k and was able to ride some of this profit back and then exit it. But then it came on the launch list for February 14th based on the price action here on the 13th. The idea was if we broke the top of this high here, then that potentially for the continuation of this uptrend would continue at least through the 100-day moving average. So the idea was to enter at $17.46 with a push to $17.84, which was close to the 100-day moving average, which was enough profit window, and a stop loss of 17.15, so just slightly below this candle here. And this thing launched on the 15th, so came on the launch here. It actually tipped, if you look here, it broke through the launch price at 17.46. We got in at 17.47, and we rode it all the way to 17.84, just as planned exactly. If I had held on to it, look how much more profit we could have squeezed in it. So what I ended up doing is I just kept watching it in my for my 401k, and then it pulled back, and I got entry somewhere around here, I believe at 1840. I'm holding some shares at 1840 in my 401k. I went through another pullback, but it looks like yesterday things helped a little bit with the market, and it's pushing this up. If this is not a perfect cup and handle formation, I don't know what is. You have the uprising portion of the cup with above average volume. You have this pullback for the handle with below average volume. We still held above. We managed to close above the 5 and the 9 daily moving averages. So with a higher volume than the last 2 days or something like that. It's still below average volume, but the high volume should be coming in as we break through the 1978. So my goal there is to at least ride it through a breakout here and potentially a touch of the 200-day moving average in my 401k, which corresponds to this also prior resistance level around 2135, 2125, something like that. So we have good potential there on the 401k, and I may put it also on the launch list for next week. But again, since this is a recap for last week, we only had information till the 22nd, which was right here. So it was looking really good last week. Anyway, not to spend too much time on this. Next one was the stock BE, and BE was a stock that I did not hold on to, although it had excellent profit potential that I left on the table, and this is also looking at this week. So again, let's look back. Prior week, this one came on the launch list for February 22nd based on the price action here on the 21st. The last few days, it had formed sort of a little look at like recovery and doing an uptrend. We had a crossover of the 5 to 8 with above average volume. Usually a break of that level is healthy, and it did break that level, so that means the uptrend is confirmed. So on the 21st, it looked like it had staged a push and then gave some back. So my idea there was to enter at the break of this resistance, just slightly below, in anticipation of the break of this resistance, with a push to this level here, which would give me plenty of opportunity. This stock has an ATR of $1, so it does move. It's a big mover intraday. And if you've noticed a lot of the stock picks lately, I've been actually increasing my stop loss to allow me to both lower the number of shares just to be more safe, and then also to give me some wiggle room before being stopped out very quickly, because the market volatility is a little bit still on the higher side. Plus that there's not a lot of volume, so there's basically a lot of choppiness in the market. And when there's a lot of choppiness in the market, algos tend to try to just clear all the stop losses, and they keep swinging up and down. So with that in mind, I looked at BE, and the next day it actually broke through the launch price and just never stopped. It continued to push higher. I got out actually a little bit early at 1398. This thing pushed a little bit to 1432. Had I held to it, it kind of consolidated for a few days, and then look yesterday, it pushed, even breaking through its 100-day moving average. So this stock is definitely bullish. Where it finds more resistance is probably going to be around the 1735 area right here, which is the next kind of resistance level. And it might just break through and continue, consolidate sideways, or pull back a little bit. I think with all this buying, there's probably more room for it to go higher. But let's see, is there any earnings coming soon or not? Probably earnings are behind us. The last earnings here was November, so it should be coming out any day if it hasn't already. But fix this here. So anyway, so that was our second winner, and executed according to plan. DNOW was our third winner, and this one was to launch at $15.21 with a profit target at $15.68 and at a board at $14.74. Now this one came on the launch list here for February 19th based on this price action here. Typically you have a green huge bullish engulfing candle. That's a good indication. It broke above the 200-day moving average, pulled back and closed at the 200-day moving average, and then the following day it broke through that. So there's conviction and people are supporting this stock above the 200-day moving average. So the goal there was to break this level here, which would be clearing a prior pivot around this area, with a push profit target to 15, like I said, 70, 50, 68, 70. So I ended up entering this at 1522 and pushing all the way to 1573 and got my profit there. It did push a little bit further to 1592 and then pulled back since then. So it was a good kind of win. It's holding above its 200-day moving average, and it is forming sort of a handle. If you look at this as a potential cup and handle, below average volume on the handle, which is a good healthy sign. So probably any break, our first big candle above probably this area, that means potentially there's continuation. We could even play this profit window again, from the 1523 sort of to the 1580 area. We've already earnings that are behind us. The only problem with this stock, it is, the ATR is about 50 cents. I mean, you tend to see big swings in ups and downs, so just be aware of that. If you catch it on the wrong day, you might be stopped out fairly quickly there. Oh, next one is my favorite, Flex, FLEX. Oh boy, this stock was painful to watch and to trade. This one has been consolidating sideways for a long time. It does have a lot of float, so it doesn't move a whole lot during the day. Most of the trading has been below average, but this came on our launch list all the way back on February 12th, and we actually entered this stock on February 12th. It was probably the longest stock that I've held in a long time. Held it for about 10 days. If you look at the table there, so launched on February 12th and at $10.22, and our goal was to take profit at 10.62. And it did actually touch that level multiple times, or close to that multiple times on the 20th and on the 21st. It finally came very close to it on the 22nd, and that's when I got out with a profit at $10.61. So it looked like it was breaking out and potentially going further, but this level here seemed to be pretty hard resistance. So I think this is going to continue to consolidate sideways, and eventually it probably will break the 1090 area, 1080, 1090 area, with a destination to the 200-day moving average. So it just needs some catalyst or something to keep it moving. It was very painful to trade the stock, and I'm glad that we got our win and got out of it. Next on the list is DAN. So it's DAN came on the launch list for February 19th, and we had a profit or a launch price of 1938 with a profit window to 2027, and then a board at 1858. So this came on the launch list based on the price action here. We had a strong bullish candle that broke the 200-day moving average and stayed well above it. Usually when you have a break of 200-day moving average, the next day is either a confirmation that the trend is to the upside, or you have a retracement back to the 200-day moving average, sometimes testing below it again before reverting back up. So that's why my plan was to break the high of the candle on this day here with an entry with a potential profit target to 2022, which is this prior pivot level here all the way back in September of 2018. So that's exactly what happened. We had a confirmation that this breaking of the 200-day moving average on an earnings day with above average volume was the actual move that the stock wanted to do, and it had a destination to this level. I ended up taking profit at $20.07 versus a profit target of $20.27, just because the stock started to stall. However, it did actually reach the profit target and above. If you held on to it a couple more days, you could have squeezed a little bit more, almost 70 more cents. I did not. So it's pulled back a little bit, very healthy pullback. I mean, you had dividends on this day. Probably people dumped after they got their dividends. So we'll see. This is, again, I think a break of this pivot is important. We've tried to test it before, so like 21.11 might be kind of where this thing has more struggle. But it looks like it had good earnings, and it's been uptrending since back in January, like pretty much every other stock. So the next one is ZUO, and that one is the one where I did break my rule a little bit and it paid out, but I would not recommend doing that again. So ZUW came on our launch list for February 20th based on the price action the prior few days. It came up on our scanners, and the idea there was to break the high of this day here, February 19th, with a push towards this level here at 24.16, which is a prior kind of consolidation here area, or kind of a support area that got violated, and the stock is approaching that area. The reason why I like the stock was because, again, it broke its 200-day moving average, pulled back. If it broke this high, that means that the potential trend is continue upwards. It's above all its daily moving averages, 50-day moving average curling up. We had a break of the 5 to 8 crossover with above average volume. So all the good signs that says this stock is in demand and being bought. So the theory was correct. The only thing with this stock is that it has a very high ATR. So it ranges every day about $1. I mean, in some cases in the past, this would range $1.27. So it does fluctuate a lot intraday, and that's why my stop loss on this was pretty high, probably 60 cents or something like that. But what happened was, as soon as I broke the launch price, and that what happened on, if I'm mistaken, February 20th must be a Thursday. No, it actually was a Wednesday. So this was a Wednesday, and it did break the launch price. I entered the stock. Now, what it did after that, it pulled back all the way to almost the abort price. So I didn't sell on the 20th just because this stock was bullish, and it stopped at its 200-day moving average. So I said, I'll give it the benefit of the doubt. Next day, Thursday morning, I usually don't start my command center Thursday morning because I have a meeting in the morning. So what happened, I was checking my phone a couple of times during the meeting, and I saw this thing sell off like crazy. As soon as the market opened, it kind of briefly came close to the launch price, and then it just sold off. I could have obviously hit the trigger price on the board, but the selling was just so relentless, and it was happening on below average volume. And I said, I'm just going to hold on to this. I mean, if it breaks the 9, then that's my sign to get out, because it doesn't want to go up, and it broke its 200-day moving average. So I held on to this. Plus, the ATR was exceeding the average ATR. So sometimes my rules for holding a stock, and it's only for very strong stocks, is that if the abort price happens to be at a range where the ATR, the average ATR for that stock, is being tested, I give it the benefit of the doubt and let it test the ATR. So let's say the ATR of the stock is $1, and I see that the stock has ranged, let's say 80 cents or 85 cents. So it's about $15 away from its average ATR, or 15 cents away from its average ATR. I would probably hold it just to see if that's kind of the limit, and then it will rebound, because usually it's going to be at the low of that day. For a strong stock, usually buyers will step in to pick it up. So that's why I didn't sell ZOO. I mean, that was kind of my theory. And then look, it bounced back all the way and closed actually above its opening. So it closed at 22.30. It almost touched the entry price. So it was natural that next day it would, gapped up on the 22nd. And I ended up taking my profit, let's see here, at $23.99, so close to $24. Now, had I held it, a few more days. Again, we pushed higher, and that's the story. It pulled back the last 2 days. On Friday, above average volume, and Friday was a good day, so I'm not really sure what it's doing right now. It probably wanted to test again the 200-day moving average before going up higher. This has it's just a very volatile stock, so if you decide to hold on to it long term, just be aware of that. All right, next stock is PDCO. Let me see, do I have a notes on that one? No, it's just a regular launch. The PDCO came on our launch list here for February 15th. Based on the price action the prior few days, the plan was to launch at 23.32, which is a break of the high of the day prior. It was going uptrend. It broke the 200-day moving average. It tested it before. It tested it again, and it seemed like it wanted to go higher. So naturally, a break of this high, what would be the natural destination would be this prior pivot down here, and it gave me a good profit window to put on a launch list, and that's exactly what happened. It triggered, pulled back a little bit towards its abort price, but never actually hit it, and then continued higher. I got in PDCO at 23.29, so a few cents before. I guess I waited for a pullback, and then I actually exited at 23.58. So right here, right, very close to the high of the day, and that was a good decision because after that it pulled down. Now this week, actually, it did break through that window again, and did the same thing and then pulled back. So obviously this pivot area here of 23.65, 23.70 is a important area. So if it breaks 23.74, and I'm going to do that right now, let's just say if it breaks a little bit above here too, I don't know, probably 24. I'm going to put 24.06, add an alert there, and let it send me an alert if it breaks that area, because that means it will probably try to push and kind of have this huge gap day. There's a lot of, not a lot of supply here, so most of the supply has been depleted, so it has less resistance going up. The key is breaking this pivot level around 23.70, 20 to 24 area. If it breaks 24 with conviction, that means it wants to go higher. Earnings is behind us. It is kind of trending sideways, other than the fact that it's uptrending here and potentially wants to come all the way to 25.74 maybe. So that's a good thing to keep on your radars for long term. Let's talk about the winners now. So the winners, WBT is the first winner. We built kind of sideways, so they understand why. It's just choppy. So the idea was to enter, came on the launch list for February 21st with a launch at 16.16 and a profit at 16.55 and an abort at 15.80. This did launch on the same day, pulled up higher. Unfortunately, it also sold off on the same day because it came all the way down, broke through the abort price and continued to go down. I got out at 15.90, which means that it violated the 15.80 and I held on to it, came back up, and then when I saw that it wasn't really recovering, I got out. And then after that, it's moving sideways. So it's consolidating. I don't think there's anything necessarily bad with how the stock behaved. Pretty much a break of the 16.45. Let me put an alert here. Would potentially be a good. Doesn't want to cooperate here. This way. I'm going to say 16. Let's just say 16.60. That might actually give it a push higher towards filling this area here. Next one, DVAX. That was another loser, and it was a bad loser. Now this one came on the launch list for February 19th based on the price action here. It looked like it was consolidating and trying to get push higher to maybe retest this area, but that did not work. So the idea was to break the high of this day, which was the entry, with a possible destination to this pivot level, which was here, basically kind of in this area here. And it gave me enough profit window to look attractive for me. But this didn't have any follow through. So yeah, it was above average volume. It did break this prior high of this day, but unfortunately it found sellers and went down. And I got a short alert here. Could have shorted here with a nice profit if I had paid attention to this one. CDEV was the next winner, and that one again was pretty bad. A lot of the material, minerals, and resources seem to be doing a nice uptrend, but then for whatever reason they've been selling off the last few days. So they had earnings, obviously bad earnings. Again, it looked like it was uptrending again, try to recover, test this prior pivot. So that was the idea there, is if you break the intraday price action here, which is above this prior day action, it might push to this pivot at least and give me enough profit window. It did go above the launch price, but then pulled back and sold off nastily. So I ended up getting out at $12.70, about 8 cents below my abort price, just because this thing just kept selling and selling and selling. And luckily I did get out, because after that it just tanked all the way down here. So that was a good decision. And then PAAS. Now that one also is a stock in the same category. It's the Pan American Silver Corporation, and for whatever reason, silver and gold decided to go through a slight correction after kind of peaking, challenging new highs. So with this one, again, the chart looked bullish. It looked like it came down here, bounced off of this low, continued higher, bounced down. So it had a higher low. It didn't have a higher high, but the idea was, when it came on the launch list here, it looked like it was very strong, and it was probably trying to test the 200-day moving average. So my theory was, you break the high of this day with some conviction, which would be above this pivot level here, the high of this day, because they were so close to each other. So 1525 was the planned entry, or 1524, with a push towards the 200-day moving average, which also corresponds to this prior level here on January 19th. I mean, that was logical. It was above its daily moving averages. The only thing was the 100-day and the 200-day are slipping down. Doesn't mean much sometimes, but it was coming up on earnings. So my thought was, if the earnings were good, it would probably break this pivot and go higher, right? But the earnings, for whatever reason, might have had enough good news to push it above this level, where enough to get me in, but then it sold off right away. So I kept holding it. The results, I don't think, were that bad. They were like mixed, but it didn't bounce. And this is the case where I had to swallow my pride and get out, and I got out at 1470 instead of 1496. So it ended up costing me a little bit more, almost double what I would wanted to lose on this stock. So that's why the premise of holding a loser is never a good idea. The premise of violating your stop loss is never a good idea. I told you about my theory with the ATR. Sometimes that helps. In this case, it didn't, and I didn't wait longer, and I got out. So this is by far my biggest loser so far in the 50K challenge, because I held on to it below my abort price. Now, the automated system does send a trigger, but I can go in the system and update it. But in this case, what I do is I update my stop loss on the command center itself. So I change my stop loss. If it was initially, like in this case, it was at 1496. So I say, okay, I'm going to put it at 1490, and then just give it that wiggle room to see if it can hold it. And then it hits the 1490, and then it sends an order. And if it's coming down fast, because it's a limit order, it will not fill. So I have to go and adjust it in the system to make sure I get out. So I put another 3 to 4 cents below the actual order that was sent in to get out. And that's why I ended up with a slightly bigger loss than I wanted. But that's kind of goes with the business itself. So after that, it obviously did horrendous price performance. It seems to might want to test this area and bounce off of it potentially. I don't know. I'm keeping an eye on it for a bounce in my 401k. All right, and that was it for the stocks for this week that we traded. Ended up, again, not too bad with a $752 of profit. And in terms of statistics, so we are a total of 27 launches since we started the $50,000 challenge, with a profit-taking accuracy of 77.8%. Total profit per share is $6.28. Overall profit factor is $2 or 2.61, and we're averaging about 900 shares per trade. So far, so good. 3 weeks behind us, and we have made it all the way to I think 54.5 area, or close to 55 area, 55K. So healthy growth there. Now I have the next video for this week, March 1st. I'm gonna complete after I finish this one, and we had actually a red week, so I'm gonna go over that as well in a few minutes. So hopefully you guys enjoyed this video. Just to remind you, there is a promotion code for Trade Ideas for March. You get 15% off with the code Trade with TI. And if you want, the link will be down below the video. But if you go to bit.ly/Holly for you, you can find more information. Use this code and you get 15% off the first monthly or first annual subscription to Trade Ideas. Again, Trade Ideas is a software that I use to find all my launch list stocks and intraday alerts. All right, with that, please, if you like the video, give it a thumbs up, and you can follow me on any of these social media. Thank you for your time, and I will talk to you later.